Hello, I'm David Chaston with the final 90 at 9 for 2019. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news that the first central bank to adopt negative interest rates has thrown in the towel. But first, in the US, existing home sales fell nearly 2% in November from October in an unexpectedly large retreat. But year on year, they're up 2.7%. Median prices are up 5.4% as the listings available for sales continues to shrink. The American current account deficit was little changed in the third quarter of 2019, a deficit of $125 billion. Exports, imports, investment income and net transfers all decreased, reflecting the American retreat from the global stage. And there was another regional Fed survey out overnight, this one from the Pennsylvanian region. It reported businesses were pulling back in this industrial heartland. And perhaps that is matched nationally in the jobless claims report update. Recall last week we reported a surge in claims. This week the report remains very elevated. And in Canada, their ADP jobs report was unexpectedly positive, with job gains in November more than cancelling out the losses reported in October. And there were central bank reviews overnight in a number of countries. Both the Bank of Japan and the Bank of England essentially did nothing, and soon we'll get the Bank of Mexico's decision. They're expected to cut their rate by 25 basis points to 7.25%. But the Swedish central bank did change, and that change was significant. It raised rates away from negative levels that they were at, saying that the side effects of negative rates were worse than the issue they're trying to resolve with negative rates. In China, their central bank pumped $40 billion in new liquidity into their banking system last week to juice up their economy. This was the largest weekly injection so far in 2019. But that is less than the Americans added in the same week. They added more than $57 billion to ensure their banking system continues to function normally. Both actions were more than markets were expecting. And in Australia, a surge in jobs in November triggered a plunge in rate cut expectations, with a chance of a February cut falling below 50%. But that job surge may be only temporary, according to some analysts. And the US Treasury 10-year yield is at 1.91% today, down 2 basis points since this time yesterday. And gold is at $1,479 an ounce, and that's a $4 rise overnight. US oil prices have firmed again and now at just on $61.50 a barrel, and the Brent benchmark is up to $66.50 a barrel. And the Kiwi dollar will start today marginally firmer at just over 66 US cents. On the cross rates, we're unchanged at 95.9 Australian cents, and against the euro, we're at 59.3 euro cents. That puts our trade weighted index at just over 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz, and we wish all our viewers a very happy holiday.